Hello, everyone, and welcome to the Banking and Budgeting Virtual Workshop, specifically for the Managing Your Money training for the Aging Services Network. This is the first of a three-part series. In case you're interested in attending the next two, I've made sure to put that intro onto the screen. We'll just give it a moment for folks to trickle in. I know it's a little bit early. People might still be grabbing their coffee. So I'll leave this up here for just a minute as we come on in. More people may have come in, we'll just leave this up for another moment to make sure we can get a good group of people. If you're interested in the next two workshops, definitely check those out. The registration is listed on the screen and we're happy to answer any questions whatsoever. Again, I know it's early, so for now, take a sip of your coffee and let us do the talking for you. Okay, it's been a moment. Let's go ahead and get started with this Banking and Budgeting virtual workshop. Thank you everybody for joining us this morning. Let me just start and say that my name is Jessica Keegan. I'm a program officer with the Office of Economic Empowerment. I'll just run you through some welcome remarks and some housekeeping just to make sure you're aware about this being a webinar, and then we'll dive into the exciting content into the workshop. So if you don't know who the OEE is, the Office of Economic Empowerment is a department within the Treasurer and Receiver General's office. We are also part 501c3, which really does reflect our mission about trying to make sure that people all across the state have access to free financial education, as well as tools to promote their own wage equity, especially for race and gender equity, from many other starts from walks of life as well. Here we're going to dive into a video from Secretary Chen just to welcome you to this training. And let me know if you can't hear this.
Hello, my name is Elizabeth Chen. It is my honor to serve as the Secretary of the Massachusetts Executive Office of Elder Affairs. We call it EOEA. At EOEA, we are committed to ensuring older adults and their caregivers have options to live and thrive in the communities of their choice. And that includes ensuring they have the financial ability to do so. I want to thank you for taking the time to participate in this money management training that's offered to the Aging Services Network. We know there are a variety of factors that contribute to an individual's economic situation, including wages, inflation, and emergencies. In this training, you will learn about budgeting, credit management, and fraud prevention. These are helpful tools when navigating one's professional and personal life with economic security. Thank you again for participating, and I hope you find today's training helpful and informative.
Great, that was a lovely, lovely presentation. Thank you so much to the Secretary for speaking to us on that matter. Now I will stop sharing my screen and hand it over to Dutch. Let me just say while he is getting his screen ready that since this is a Zoom webinar, you won't be able to use any sort of camera or come off mute, but you are welcome to ask questions and definitely feel free to do so either in the chat and Q&A, and I will switch the presentation off.
And I will take over. Good morning, everybody. Thank you, Jessica, for that great introduction, and also thanks to Secretary Chen. Good morning, everybody. Thanks for joining us early, 8 o'clock on a beautiful morning. I actually am wearing a long sleeve shirt and my heat kicked in, so I guess fall is here, but I do appreciate you guys taking the time. I know there's a busy day, you have a lot of important work to do today, and I'm happy that you had some time to join us today to learn information around financial education. My name is Dutch Koltoff. I am the Financial Empowerment Manager for M&T Bank. And I'm joined with my colleague, Jordan Green. You see us both on the screen. We both are responsible for financial education, financial activities and sharing financial activities through our footprint in Massachusetts. And we're really excited for our partnership with the Office of Economic Empowerment and the Executive Office of Elder Affairs. You know, the pandemic has only highlighted the need for financial education, and not just the pandemic. I think everybody right now is very aware of different type of financial needs when you think about inflation, when you see rising gas prices. So the more we can educate, the more we can talk about financial resolutions, financial resources, I think the better it will be for everybody. So hopefully today we can share some great resources and tips with you around banking basics, around budgeting. There's a few things I just want to mention before we get started. And first of all, foremost, is just to help understand how important it is that these knowledge and these tools can help empower you and support the populations that you work with on a daily basis. Your work with the elderly is so important. Unfortunately, the elderly are often targeted for financial scams, and the more you can be educated, the more you can able to assist them and protect them from financial harm. So we hope that these trainings provide you with the opportunity to learn and develop skills that will help support the elder community, but also that will help yourself, right? In your role as a home care worker, personally and for your family, hopefully you get some tips and some suggestions, some ideas that can help you on a day-to-day basis. There are fantastic resources available to you, and throughout the presentation, I'm going to probably bring up some resources to help you create your own financial activities, but also I would recommend that you take a look at the website, Financial Life MA, the website for the Office of Economic Empowerment. There's different resources. There's different resources that the state offers, both you and your families and the elderly populations in their daily life. Last thing, I just want to make sure that we understand that these are trainings and these are tips and suggestions. We're not designing these to turn you into financial experts or financial advisors. We're not giving any type of certification. We truly want to just give you additional education. And any time that you feel that it would be important to have additional questions that can help you customize your roles, please make sure that you turn to a financial expert, that you turn to an advisor or a professional directly in your workspace that could help you out. We have a pretty heavy agenda. We're going to be with you till 9 o'clock. There is a Q&A section. There is a chat section that you have the ability to access if you wanted to answer some questions. We'll probably will get to those to the end. So if you have some questions pertaining to a topic, feel free to put them in the chat or the Q&A. But just so you know, I will very likely just kind of move along with the agenda until we get until the end of the presentation. All right. Goals, objectives, logistics. Hopefully that made all sense. And then I'll say we get right into the topic and we'll start talking. Today we're going to talk about banking basics, budgeting basics, give you some strategies and tips and resources. Please keep in mind that next week we have a topic around credit scores, credit reporting, and identity theft protection. And a week later, we'll host our final topic around online and mobile banking accessibility. So 3 great topics to help you with an overall thought process around financial wellness. Today, we're going to start with banking basics, and we're going to review some of the terms that you might hear on a daily basis when it comes to banking, as well as talk about the different financial institutions, products, and services that you might see. So let's see if we have the ability to do a quick poll, and if you can answer directly, that's fantastic. If not, you can also answer it into the chat. But when you think about a financial institution, when you think about banking or credit unions, what type of services do you think you will need the most? Is it savings accounts, checking accounts, money markets, or any other type of account? What comes to mind when you think about banking services in Massachusetts? And the poll comes right up. So if you have the question in front of you, please take a second and answer the poll if you can. When you think about a financial institution, what do you think? Savings account, checking accounts, money markets, other types of accounts? A lot of options. All right, and we can close the poll and I'll move out. We'll see what kind of results we have. Checking accounts. So that's so common, and I'm really interesting to see that. Most of the time when people think about a bank, And you talk about my bank, it's normally the bank that is linked to, indeed, the checking account. But of course, banks and institutions offer a lot of other financial abilities. And we'll talk about those in just a second. So what are financial institutions? Where can you keep your money? Where could you have your checking accounts, right? Banks, credit unions are very well known in Massachusetts. We also consider non-banking financial institutions like money service business, check cashing services, business that help transfer, convert money. Not the most popular choice, and often a choice when it comes to our immigrant population, where we kind of educate differently because there could be some additional fees that you normally wouldn't see in the banking or the credit unions. And talking about cultural differences or misinformation that has to do with trust, we also find that a lot of people that might have moved into the States have some type of difficulty trusting banks and credit unions. And you might find that a lot of the people you work with on a daily basis, or maybe even family members, feel that it's important to keep money at home in a mattress. And I'm an immigrant myself. If you haven't heard it yet, I was born and raised in the Netherlands. I moved here to marry a beautiful lady from New Hampshire. And when I came to the States, I definitely noticed there was a lot of difference between the banking scenarios in the United States versus what I was used to in the Netherlands. In the Netherlands, we have 3 banks in total. My little hometown didn't even have a bank. I live just north of town in Swampscott, and we have one little shopping center, Finnan Square, and I believe there's 8 banks. Every street corner has a bank that is trying to help you with your money. What's important to know is that I learned quickly that banks and credit unions can be trusted in the United States, and there are many safeguards in place for your protection. A lot of these banks have safe deposit boxes if you want to keep your funds anonymous. If you want to make sure that the IRS or another government agency, is not fully aware of all the finances you have available, you could still keep your valuables safe and protect them against theft, fire, or even worse, by going to a bank, having a safe deposit box, or by protecting your money in bank accounts. But that's something that you might see on a daily basis. It's something you might see when you work with your elderly populations. I remember my mother-in-law kept some money in a little cheap kettle, and after she died, we actually on a yard sale think we lost some of it. So if you see that around with your elderly populations, it's important to know that there's safe protection for them that's available. Banks and credit unions are similar in so many ways, right? They all accept cash and checks. They can help with transferring money, providing loans, traveler's checks, foreign currency often. They're very convenient nowadays with online banking, ATMs, debit and credit cards. And the last piece that I want to mention here, we're going to talk about in just a second, is that they offer insurance for deposits on certain types of accounts for up to $250,000 per person per account type. There are some similarities. There's also some differences. And historically, those differences had to do with access or rates. You're going to find in Massachusetts specifically that in today's competitive environment, many of the larger banks now offer great rates on savings and loans. And many of the credit unions have increased access via mobile phone, website, or location services. So the differences between banks and credit unions really has kind of gotten somewhat blurry. And like with all financial services, I would simply recommend that you find the institution that fits your personal needs best on location or rate or account. Do a little research, take a look at the fees or the balances that are required between the bank or a credit union. And from a location perspective, from a service perspective, from a rate perspective, find the bank that really works best for you, often available in your local town. I want to quickly talk about insurance because I believe that this is a topic that when you work with the elderly population, that you might run into when you see 12, 13, 14 different bank statements lying on a table, or you hear conversations around being confused about different money in different accounts and protection. Both the FDIC for banks and NCUA for credit unions will protect deposits at the bank. And if you look at the line, it says $250,000 per depositor per account for each account category. And what that means, and which is important to know, that it's possible to have more than $250,000 with a bank and have it fully insured. A married couple could have $1 million or more fully insured with the bank. A married couple with children can have with 2 children can have $1.6 million fully insured with the bank. So if you find in your daily work that the elderly people that you work with are really nervous about bank insurance and having multiple banks to protect their funds, this is a way that you can help educate them. And there's actually a website, the FDIC.gov at the bottom, where there's a deposit insurance calculator that can give some initial assistance around how much money could be insured in one institution. And again, you can always walk into the bank that you trust the most and say, hey, what can we do to make sure that our money is fully insured without having to have it in all these different places. Checking accounts, CDs, savings accounts, money markets, interest-bearing accounts, all are fully insured by this insurance. They're deposit accounts. What is not insured are things like stocks, crypto, annuities, bonds, life insurance products, different type of securities. Treasury bills are popular right now with the inflation rates. So just keep in mind, again, there's a difference between the two different options. As a client, you have the opinion to select products based on age and risk strategies that might be most appropriate. Elderlies are also very often targeted by investment type of scams, unfortunately, where people try to take their investment money in promise of higher and safe returns. So just be careful at a certain time and a certain age. You gotta get away from products that are not covered anymore. Account ownership is what is a key determination in the insurance and the protection of the funds. So here's just a few examples on how accounts could be set up that would make it easier for the elderly population or you and your family to manage your funds. And it's important for the elderly, when they're sound of mind, to start having conversations around account ownership. And we often recommend that seniors take a look at their family and maybe add a family member to their account for joint ownership, so that that person has the full ability to make deposits and withdrawals, including account closure. I'm also bringing up custodial accounts. If you personally have children that you would like to introduce to the banking systems, a lot of banks make it possible for a parent to have a child on an account, or for a child under 18 to have an account, as long as a parent has the ability to monitor the account. And last, and again, really focused on the senior citizen population, power of attorneys, where an account owner designates someone else to control and access the account. Often we see power of attorneys that come up for senior citizens, where senior citizens gives power of attorney to a person outside of the family that they initially might trust. We just want to make sure, because these documents are easy to recreate, that the elderly person goes into a bank with this trusted person, has a conversation to make sure that the power of attorney truly is the best way to go, and banking personnel is really trained to look for red flags and triggers. But just some ideas around account ownership and how accounts could be set up in the bank. You might think that it's really hard to open up a bank account. I told you I was an immigrant myself, and I was pleasantly surprised. Even before I got settled in the US and even before I had my social, I was able to open up a bank account just with my Dutch passport and my local address where I stayed at the moment. So if you're nervous about keeping your money in a mattress, if you're nervous about, okay, what type of information do I need to share when I go into the bank, more and more banks are making it quite easy, both for the US population and for non-citizens, to open up bank accounts and make sure that your money could be protected. You do have to bring forms of ID, which could be a driver's license, passport, birth certificate, social security card, if you have government issued ID from the States or from your home country. Most of the time, a local address is needed, or you have to be able to confirm a foreign address. And you'd have to start with an opening deposit. But more and more banks are making it, and credit unions are making it quite easy for anyone to open up an account, even with documentation that might not all be US based. And again, if you have family coming from abroad, if you're like me, an immigrant, and you want to get started in the US, or if you just want to be safer about how you keep your money, opening up a bank account truly is the best way to go. Banks make it easier and easier to take a look at your account. If I wouldn't work at a bank, I'm not certain if I would ever walk into a bank, because most of the activities that you would like to do around banking, you can now do online. And we'll have a full topic on this in a couple of weeks. 2 weeks from now, we're going to talk about online banking. I see a question around a veteran's ID, and just from an account opening perspective, That is considered a government issued ID. So very likely you could bring a government issued ID like a FedID into a bank for account opening if it has a picture. It would require a second piece, like a social security card. It might require a second documentation, but a lot of banks would use that. Sorry. Going back to the online banking piece, just to keep in mind that we have a topic around online banking, mobile banking, the ease of access, and how important it is to protect your password 2 weeks from now. But I would truly recommend that everything that you do is done online. We talked about all the different statements that might be lying around in the homes of the people that you work with. Having everything accessible online, easy accessible online for people to take a look at on a day-to-day basis. First of all, it's easy. Second of all, if you take a look on a daily basis, you much quicker are aware of activities that shouldn't be there, and you can notify the bank quicker. So I'm a huge proponent of online banking. Okay. Sorry, once in a while. There we go. So that was really quick on banking, the basics on banking. We're really going to spend most of the time, the remaining 40 minutes, on budgeting. But I wanted to share some information to have you start thinking about visiting an expert, visiting the banks to learn about different accounts and protections that are available to you, where a bank could help you or your senior clients. And again, on a day-to-day basis, where you would see it most in working with your senior clients and with the elderly, is probably the amount of paperwork. My mother-in-law had a pool table that was never used to play pool. It was truly filled with all the different documents that were sent to her from investment companies, from bank companies, from credit card companies. The elderly are a target for different type of financial products and services and resources, and some of those are really good and helpful, but there's also many that are not needed. And the easier you can make it by getting expert advice and by consolidating at a certain point in your elder life, the better it would be, the easier it would be. And it would also help with some of the stress that you might experience on a day-to-day basis when you deal with the elderly population. So hopefully talking about banking and financial institution helps a little bit. Number one recommendation, every single workshop that you're going to attend from me, I'm going to tell you, go visit your local bank, go visit your local advisor. If you have some specific questions for your situations, don't be afraid. Every question is important, and it's just important to start early on your road to financial success and freedom. So let's go to the topic of budgeting. Let's go next to our next topic. And I'm going to make sure that you're all still with me, that you're all still awake, and that we're ready to go. So we're going to start with another poll. Yay! I know you're jumping up and down of excitement. What are some obstacles to budgeting? What makes it hard for you to budget? If you have a chance, there's only 3 answers. Does it take too much time? Is it just too complicated? Is it just too stressful? Do me a favor and take a quick look at the poll and put in your answers for me. Why is it so hard to budget? All right, Jessica, let's take a look at the poll response. If we can. Oh, good little mix. Takes too much time, too complicated, too stressful. Too many people might say, you know, it's a combination of all 3. But none of them will say, you know what, budgeting is just fun. Only Dutch and Jordan, the 2 bankers on the call, probably think that budgeting is a fun activity. So why is budgeting, why does it have such a negative connotation, right? People don't want to budget. They don't want to think about the future. It's too complicated. I have no self-control. It takes too much time. It's a hassle. It's stressful. Everybody would agree that creating a plan for budgeting is important, right? It can help save money. It can help you live within your means, help pay down debt, help save for future emergencies. But many people simply don't budget. Many people don't put a plan into place to budget. What's important to remember when you look at a budget, and I actually call it a savings plan instead, right? Because a budget can really help you save money for your goals. What's important to remember with most of the obstacles towards budgeting are mental blocks. I often compare it to dieting, right? There's no physical limitation, there's no time limitation often to set up a budgeting plan or a savings plan. There's just all these thoughts that we give ourselves on why it's important or why we cannot do it. And the number one reason that I even mentioned, a lot of people feel that they only need to have a savings plan or a budget when they have money. And they'll say, well, I don't have a lot of money, so I don't need a budget. I don't have enough money to save. I can barely make ends meet. I live paycheck to paycheck. And I can tell you, because I came to the States with $50 and 2 suitcases, that what helped me get started when I realized how different the US banking system was creating a written budget. So we're going to talk about that a little bit. And to get started, and what makes it important, again, I'm going to compare it to a diet. First of all, is that you make it personal, right? You can't just listen to Dutch who tells you that it's important to have a budget, but create some goals, create some ideas, create some wishes, and get specific goals in mind. And set those goals for a long-term, mid-term, and short-term. Short-term goals normally less than 3 years. I want to pay off a credit card. I want to go on a vacation. There's a certain piece of furniture I'd like to buy. Mid-term goals might be a down payment on a home, might be paying off some credit card debt. And long-term goals, over 10 years, I'm saving for retirement, or I want to make sure I pay off my mortgage, maybe creating a college savings fund. When I talk about making it personal, one suggestion I would have, if you can, I have 2 teenage daughters, and the side of our fridge is filled with magnets, but also with different pieces of paper. Take a picture of your goals. Right? You want to go on vacation to Hawaii? Take a picture of a nice sunny beach, put it on your fridge. My midterm goal is a boat. I've shared that with people before. I'd love to have a boat. I live close on the water. So my midterm goal, I have a picture of, it's actually a picture of a yacht, which I'll never be able to get. But it's a goal, it's a dream. Someday I want to be Bezos and have a huge yacht. But even if it's just a boat, I have a picture of a boat on the side of my fridge. And then long-term goals. Make it personal. Maybe your personal wallpaper on your computer, on your phone is a picture of your goal. And you can take it one step further. If you look at the bottom, you can actually give your savings accounts nicknames of your goals. So if you go to your bank and you have multiple savings accounts, you could have a short-term savings account, a mid-term savings account, and a long-term savings account. And instead of just having it called savings, you can actually give them a nickname. So when you go online, when you go to your computer and you're like, I really need to transfer some money, instead of moving money from savings to checking, and the same at an ATM machine, it now says Hawaii vacation. It will now say, are you going to take money from your Hawaii vacation to pay for your coffee? Or maybe there's another way for you to do it. So it's just, again, it's a mental ability. It's a mental trigger to make you realize, hey, I'm saving for something that's important to me. Do I really want to dip into these savings to pay for my day-to-day expenses or other wants and needs that I might have? So make it personal, set those goals, and visualize those goals as often as you can on a day-to-day basis. The only part of budgeting that's not fun is also super important. Once you have your goals set up and once you have visualized your goals, you need to know where your money is going. For at least 3 months, I need you to collect your bank statements, get a calculator, use a phone app. There's different bank budgeting tools, there's online apps, but you need to track your expenses. Where do you spend your money? And just as important, communicate with your partner if you have shared accounts. Where do you both spend your money? Are there subscriptions that you forgot about? Are there memberships that you might not use? If you have a joint account, do you spend the same amount on similar items? You might be paying for cell phone insurance together. That could be done automatically. Do you have automatic payments set up? And I say 3 months because often on a quarterly basis, there might be some bills that you normally would forget about. So truly take the time, take one Sunday evening, get together with anybody else who's important for your goals, share your wishes, but more important, write down your expenses. So you know exactly where you're spending, have a list of your debts, and have a good idea of where your money is going. It's a shocking type of experience. You might be amazed how much money you spend frivolously, but it's also really helpful when you start thinking about a savings plan and when you start thinking, well, I wasn't able to do this. Now you have a good idea where your money goes, and you can go to the next step for a savings plan. And that's creating your own budget. So you have your dreams, you visualize them, you see where your money is going. Now you want to set up a different savings plan. And there's so many different strategies that can be used, and they all work really well. I'm not here to recommend one strategy over another. Just like a diet, again, if you have a strategy, pick it, but stick to it. I'm going to focus on a strategy that's called the 50-30-20 rule, but you can Google different budgeting strategies, savings plan strategies, and pick the one that works best for your personal situation, as long as you feel that you can stick with it, as long as you feel that it makes the most sense to you. 50-30-20 is very simple. 50% of your income should be spent on needs, 30% should be spent on wants, and 20% should be spent on either debt repayment, and once that's done, on savings or together. So what do these terms mean? What is income? What are needs? What are wants? Well, very simple. Income, there's gross income and there's net income. And when you set up a savings plan, you might want to look at your gross income. You might want to see, what is the total amount that's on my contract for work? But really, when it comes to being able to spend your monthly activities, you should look at your net income. What is the amount of money that physically hits your checking accounts? What's the amount of money that you physically get paid by check? If you do have a company that offers a 401k or another savings option before taxes, make sure that you take advantage of that. But if money is left over afterwards, we would take a look at your net income to be able to start talking about your savings plans. Once you know what your net income is, then we go and say, okay, what are my wants? What are my needs? This could really be a discussion point, and it varies per person, right? I like to drink my coffee. I could probably live and switch to tea if that would be important for me to have my boat. However, when I sat down within the family and I talked to my wife about giving up coffee, she was like, nah, can't do it. And what's important, and that's why I said you need to personalize your savings plan. You can't just follow some of general rules like, all right, give up a cup of coffee a day and you'll be fine. A budget, a savings plan will only work if you personally are committed to it. So your own wants and needs need to be determined, and you need to make sure that your wants and needs are activities that you can work with, right? That it's okay to have wants, it's okay to have fun, and it just would be unrealistic to expect anyone to completely get rid of their wants and fun type of expenses. No savings plan, no budget will work if you don't take time for yourself and if you don't have good activities. So looking at this list, clothing, salon, childcare, for some people, it's more important than others to make sure that the hair looks good. It's not up to me or any financial advisor to tell you to give up or quit some of the activities that are important to you. You just need to be able to say, okay, when I look at my wants and my needs, if I split them up in what is absolutely necessary, maybe there are some needs that I can then start reducing. You don't have to quit them, you might have to reduce them. So I came up with an initial example that seems pretty normal from what I've seen here in Massachusetts. And I realized that the rent number seems a little low in Massachusetts, $600 for rent. But if somebody has a $2,200 per month income, hopefully that is a decent amount for rent. Maybe there's a roommate, again, maybe there's a partner that you share rent with. Groceries, utilities, car payments, insurance, transportation to be able to get to work is important. Health insurance, medical expenses, internet and phone we can't get rid of, childcare expenses, all items that when I looked at my initial example, that those are needs. I need to have those. I cannot remove those of my savings plan. Coffee, restaurants, going out for entertainment, buying clothes, and the salon are wants. And I spend about $330 on that in this example. And then I pay my minimum payments on my credit cards and my student loans. I'll be very good and very quick at calculating, or you can see the screen and you see the bottom right. You'll see that the total amount that is being used on this budget is $2,265. And the income is $2,200. This is a very typical example of what we see on a day-to-day basis in banking, unfortunately. Because the bills are kind of spread out throughout the month, people might not realize that they're actually spending more than comes in, which creates more stress, which creates more spending on food, more spending on coffee because you don't sleep, which just gets you in this negative cycle. This is why it's so important that you kind of separate and list all your expenses. So right off the bat, you can realize, wait a minute, I'm spending more than I make. No wonder I'm stressed. No wonder I think I can't budget. Let's make sure I can reach my goals and take a better look at my needs and my wants. There's only two ways that you can go after this point. You either need to raise your income or you need to lower your expenses. That's how you can make sure you start fitting into your expenses. So how can you lower expenses or you raise your income? You can manage your debt. That would lower your expenses. reduce your spending, would lower your expenses. Take a look at the Commonwealth support resources that are available to you. Are you taking advantage of all the different aid and assistance that's available, you or your senior citizen partner, that would help lower expenses? Is it possible to get additional gig work, freelance work? One of the benefits, if there is one, of the pandemic has been that there's more remote work opportunities available, and you might be able to find some type of freelance or gig that allows you to take 1 or 2 hours a day if you have it available and make a little additional income. If you have any tips that you are aware of, if there's any suggestions that you have, feel free to share them in the chat so everybody can see them. And this is being recorded, so we can always take a look at the chat afterwards and see if there's any tips that you wanted to share to lower your expenses or to raise income. We're going to take a look at these in more detail. I'm going to start with debt management. So if you have credit card debt, if you have other monthly debts, and you've made this list of the balances and the interest rate that is charged, you might say, well, I need to pay them off a little bit by little. And many people, and there's a little extra money available, might pay a little bit more than a minimum payment. It is proven that the best strategy is to focus on one debt first, and you can do that in 2 ways. There's the avalanche method, where you pick the largest interest rate and pay that one off first. Once you have one paid off, you then start using that money towards your second largest balance. You can also go the other way, the large interest rate. You can also do what they call the snowball method, where you pick the balance that's the smallest, pay that off first, and then once you have the extra payments, go to the next, then go to the next. In both cases, they both work. They're both great strategies. They both will help versus making smaller payments on each card. Both cases, once you have paid off one of these debts, I want you to stop and celebrate. Take 1 month away from paying these debts off. Take 1 month away from going to the next step, and be completely happy and to say, all right, I paid off a credit card. Let's have a little fun and go out for a nice little dinner. And then next month, I'll start using my money towards my goal. It's important throughout budgeting and savings that you recognize and celebrate your achievements. And especially with debt management, if you pay off some credit cards, if you're able to pay off some loans, go right ahead and do so. 2 ways to help reduce debt, right? Avalanche or snowball method. When we go to the next piece, what can we do to lower our expenses? Is reduce spending. And again, this is another slide we could spend a lot of time on. It's 8:40, we're right on track. But here's some tips on reducing spending that might work. Now, again, each person is different. Not all tips and strategies work, but I'm going to just share some of the items that me and my wife discussed and some actions that we took to help reduce some of our spending. I have 2 teenage daughters, I think I just told you. I did not realize that going consignment shopping is cool nowadays. We spend a lot of money on clothes, and we are able to pretty much cut our expenses in half by understanding that when I grew up in the 80s, it was important to have brand name clothing. Nowadays, it's more important to go to consignment stores, I guess. Fantastic news for me. Great for me to be able to help my kids be cool and at the same time reduce spending. We do buy in bulk. We do go to clearance aisles. I'm a member of BJ's, and we realized that our $100 investment over the year was worth buying items in bulk. When we were looking at all the different expenses, we realized that I was going to BJ's once a week to do the shopping, and my wife separately still went to Stop and Shop and still did some other activities that had to do with grocery shopping. We stopped that, and one of the ways that we stopped doing is because, one, when you go to a grocery store, they're really good. They have all the important things in the back of the store. There's a reason that milk is in the back of the store. So you have to walk by the chips aisle, and you have to walk by the candy aisle, which is not good for a guy like me. I think this video, I'm not a small guy. The second piece that helped us when we looked at our spending on grocery shopping, we have the Amazon Google Assistant in the house. We use that for a shopping list. Anytime that something is low in the house, anytime we're out of something in the house, we tell Alexa that we want to put it on the shopping list. We only go shopping if it's on a list. We don't have impulse shopping for groceries. We don't have impulse shopping really for anything at the moment. If it's on the list, we buy it. If it's not on the list, we must have it somewhere in the house, which avoids us having multiple items, 4 bags of sugar that were lying around the house beforehand. Talked about coffee. My wife is a Starbucks fan. I do have the Nespresso machine to make my own coffee. But even with coffee, we found out that the drink that my wife ordered that was $5 a day, really it was just an espresso with coconut milk, and Starbucks just called it something fancy. He went to the barista. He's like, I can't spend $5 every time I order a drink. This is what I like. Find out that instead of whatever the name was that Starbucks called it, a quadruple espresso with coconut milk was half the price. Boom. Same thing that she likes to drink in a Fenty cup with ice, saved us some money. Another one I want to talk about that I hear all the time is, should I cut cable? Right? I love my TV. Spent about $140 a month on Xfinity before I cut cable, and I did. So I now have a high internet plan. I have Sling. I have Showtime. I have Netflix. Not only do I have, we have Spotify, we have Microsoft Gaming for the kids. I probably spent the same amount of money that I spent before on my cable and television entertainment. But in the previous scenario, I then on top of that paid for all these extra subscription services. And I was able to combine them because I realized when I paid for cable, I also paid extra for the cable converter. I paid extra for the monthly rental of the router, and I was able to consolidate that. Same thing with my cell phones. We paid for a certain data plan. Unlimited data was cheaper for us because I have teenage daughters. So every cell phone company gives you a 6-month history where you can kind of see how much data you've spent, and you can then determine if that's the right amount of money. Some items that work for us. And again, if you have ideas, if things that work for you, go right ahead and put them in the chat. Maybe we can look at them. But there's an important thing to remember. We didn't quit any of our activities. We didn't stop any of our activities. We didn't cancel any of what we consider our wants. Everything from a lifestyle perspective that we did before we put our savings plan together is still in place. We just reduced or planned around our spending better than before, right? Which helped us reduce our spending and reduce waste and still have pretty much everything we wanted to have. Same thing when we talk about deals. If we wanted to purchase something that was a large item, we normally now, this sounds like fun, date night, Sunday night, we kind of talk about expenses. Is it really important to buy something at 50% off? Just because it's a great sale doesn't mean that we use it, doesn't mean that we need it. Can we wait 24 hours just to make sure that it's truly a purchase we want to make? So just some activities that allowed us to lower our expenses. And again, there's many more. It's important that you sit down with your family and say, this is important for me to reach my goals. It's important when you go into the homes of the people that you care for, the elderly population. My father-in-law was paying $260 a month for cable because he had every single cable channel. He never watched HBO. He never watched Showtime. Truly, just an antenna would have been fine. But we had the chance to just kind of sit down and say, all right, let's cut your cable subscription in half and save you some money there. They're on a fixed income. Just as easy as taking a look at where the money was going when we realized he was paying for all these subscription services that he didn't need. And you can do that with your elder clients. So we cut down on our wants, but we did not quit anything. Called and negotiated on insurance, called and canceled or moved some subscriptions are now. Did not reduce any expenses in this example. I didn't reduce any expenses for childcare either. Transportation, medical, or groceries all stayed the same, right? If you now look at the budget plan or the savings plan after putting some of these strategies into place, you're going to see two things. One, we're exactly spending $2,200, right? So we're not spending more than what comes in on a monthly basis. Our total needs, none of them were cuts. Our needs are still there. We didn't quit anything. Our total wants, we didn't quit anything. We just lowered how much we spend on our wants. We are able to pay down our credit card debt. And more important, we have $100 extra each month towards savings. But just by making the plan, we were able to reduce our expenses, increase our savings, and continue to work with wants and needs. This is what a plan can do. This is what putting down your expenses on a list and making your goals ahead of time and really focus on what's important can do, and this is why budgeting is important. I'm not telling you to quit anything that you're doing. I'm just telling you to take a look at what you're doing and possibly have the ability to reduce some expenses when you can. When you think about savings, and we talk about savings, there's just a couple of additional tips that I just want to make sure you play. So I told you it's important to make sure that you write down your expenses, sit down to have a written plan, at least for 3 months, and make yourself this budget. The second most important thing when it comes to budgeting and when you set up a savings plan is that you automate your savings as quickly as you can, as automatic as you can. You kind of forget about your savings. Once you have your goals in place, you want to make sure that money goes towards your goals without you physically having to worry about it. And there's a few ways to do that. If you have direct deposit, most banks would allow you to split your deposit between checking and savings. So you could tell your employer that every paycheck, let's say 90% of your paycheck has to go to the checking account that's set up for your budgeting. 10%, whatever amount you realized in your savings plan you could save, goes to your savings automatically. You don't even see it, it's just there. You can also unlink your savings account from your debit card or ATM card. So you can't just go to an ATM machine and transfer money. You can't just go to an ATM machine and take money out. You physically have to go online and make that transfer from your Hawaii account to your checking, or you physically have to go into a branch to make the transfer, which hopefully will make it a little bit harder. Again, that mental block. If there is any type of pre-automatic savings plan that is offered through your employer, take advantage of it. It's almost like free money, right? So the moment you have a savings strategy in place, automate it. And then protect yourself. There's a few different ways you can do it. There's a lot of different ideas on how much money should I put aside for savings. And this would be like a short-term savings account. On average, we would recommend 3 months. Some people say 6 months. But it's important to protect yourself for a financial shock. It would be so frustrating when you have a good plan in place and then something happens to your car or you have a flat tire and you're not able to protect yourself. We were able in our household to start using the credit cards for our emergency, right? So we paid down our credit cards. We actually freed up some credit cards. So now one of them is in a safe deposit box, still there. And if I have an emergency, instead of touching my savings, I would be able to use my credit card that was maxed out before, but now it's there. And I would be able to then put my budgeting plan back into place to pay off the credit card debt. Same thing with savings. Maybe initially for your short-term goal, you don't go to Hawaii. You make sure you have a savings emergency fund first, and then change it to your Hawaii plan. But make sure that all these fantastic plans, all your strategies don't get derailed without having some type of emergency in place. Initially, my parents were my emergency backup plan, and I'm happy that we don't have to do that as quickly anymore. But just keep that in mind. With all this planning, you got to plan for emergencies. All right. So a lot of things we talked about when it comes to budgeting, right? Visualizing your goals, make your goals fun. Have a written budget, make sure that you know where your money is going, write it down, talk to your other partners, communicate with friends and family that you have a savings plan, that you have goals you want to reach, and then some ideas around reducing expenses. I talked about sticking to the plan, right? So talked about making it automatic. I talked about creating these goals and these wants versus needs bucket. I talked about automating real-time spending feedback and setting reminders. What's really cool, and you'll learn this in our session 2 weeks from now, that most financial institutions will send you reminders if your balance falls below a certain amount, if you're about to overdraw, if there's a spending habit that not normally happens on your cards, you can get a text message saying, hey, are you sure you want to do this? So there's a lot of automation available to help you stick to the plan. And like I said before, you should walk into the bank, and if it's for you and your family, fantastic. If it's more helpful to do it for an elderly, do it with them and their family. But go to your financial institution and say, you know, we're trying to budget better. We're trying to be better about how we spend our money. What are some of the tools and resources you have available? I skipped strategy 1 because it's so important. Focus on rewards versus punishment. Like, we're not asking you to quit anything. We ask you to reduce, but you also should continue to celebrate important moments that matter around your plan. So hopefully there's some good ideas and some suggestions. Next steps, and I have 5 minutes left, so we're good there. When we're finished, I'm going to see there's some Q&A, but when we're finished, we're going to ask you to complete an exit interview just to make sure that this topic was important, that you felt you received information that was important to you. I would strongly suggest you look at all the resources available to you with the Office of Economic Empowerment, as well as the Executive Office of Elder Affairs on their websites. There's a lot of financial help. There's a lot of educational help available to you. MyFinancialLifeMA.org is a personalized digital service that allows you to create your own personal learning plan. So if you want to learn more about budgeting, you want to learn more about saving for college, you want to learn more about how to pay off credit cards, there's different modules, 3 to 10 minutes long, videos, instructions. They're all interactive to teach you how you could start working on those financial activities. And then just as a reminder, we have next week a credit and scam and fraud prevention workshop, and 2 weeks from now we'll have a mobile banking virtual workshop, and I hope to see you there as well. So that concludes my part of the presentation, but I'm going to look at the chat and I'm going to see if I have any specific questions. Anybody who has. Oh, OEE, Office of Economic Empowerment.
I can take over that one just to briefly reiterate that the Office of Economic Empowerment, so we're a state department with the Treasury. We also function in the same way as a nonprofit. Our goal is just to spread financial education, which is why we are lucky to partner with people like Dutch at M&T Bank and with people over at EOEA to make these possible. So we are just trying to make sure that these workshops can come out and get to you and get to your network. So the Office of Economic Empowerment, the State Department, that's who we are. I'll hop off here too. Feel free to ask some more questions.
Absolutely. And I changed to share, so you just had my video to deal with early in the morning. Sorry if you weren't awake yet. That should do it. Hi.
I can hop back on to save you from that in case anybody has any questions about the Office of Economic Empowerment as well. I'll save you, Dutch.
I don't see anything in the chat. So I'm going to sign off. And again, I believe there will be an exit interview, but you're always free to email us if there's any additional questions. And if not, then I look forward to seeing you all next week. Thank you all so much for your time. Have a fantastic day.
Thank you, everybody, for coming. We'll make sure to get this recording out and follow up with an email. And yes, once you hit exit, you will be able to answer a survey. So thank you, Dutch. Thank you to our EOEA partners, and everybody have a great day and hope to see you next week.
Yay.